GM, we are so back. I'm at the new base camp now, so we'll be returning with daily videos. We've got morning markets coming up now, and we've got a weekly outlook coming up later today for a high time frame analysis. Let's get into it, looking at the Bitcoin chart. So on the weekly time frame, what we're seeing is we have broken down from this distribution. So daily, weekly time frame, that is in a downtrend where we're now consolidating from that down move. However, when you go to the monthly chart, we are still holding that monthly market structure over here until we actually see a close below it. So that's why you're in this period on Bitcoin where it's an indecisive market. That explains all of the chop that we've been seeing recently. That's why we're in a range from 80 to 97K. It's because you're in a market which doesn't know which way it needs to go. At best, we're in a recovery period right now. At worst, we're in a consolidation before another leg lower, since the trend is your friend. And you've got those different time frames, the super high time frame trying to hold on here to the overall macro trend, and you've got the daily and weekly time frames showing that early sign of Bitcoin breaking down. But that's why when you're in this range, you've got to wait for the break. And it's why I said on the video last week how this time is not different on Bitcoin. We've not had enough cause and effect for a rally to new all-time highs. And that's exactly what played out. It's funny, I haven't uploaded in a few days now, but when you go back to these videos, it really shows you just how well they play out then in hindsight. So let me quickly play this for you.
Cautious that this is unlikely to lead to new all-time highs simply because of cause and effect. We have been going sideways for around 50 days, whereas the distribution before we broke down was around 111 days. So cause and effect, all else being equal, we haven't accumulated and recovered for long enough to outweigh that heavy supply that this distribution built up. You need to see at least the equivalent, which would be 110 days roughly, if not ideally more, of a recovery period after such a heavy distribution cycle top that we've had here, really everything above 105K, let's call it.
So you guys kind of get the point there. Bitcoin, at best, it's in a recovery period where we're going to go sideways and bottom out here, or at worst, it's going to be gearing up for a new breakdown lower. Cause and effect, it's simple. There wasn't enough of a cause built for a rally to be sustainable going into those higher hundreds or anywhere near all-time high. It was very obvious, and well, now we've seen it. Last week's candle retraced 4 weeks of upside in a single candle, which is indicative of buyer exhaustion here. It is indicative that we are still in that choppy market, whether it's going to be a recovery, whether it's going to be downtrend continuation. More on that in the high time frame outlook coming up later today. But zooming into this range, this indecisive market we have, what can we see? Well, the range I've been talking about really since back in December now, it's the exact same Fibonacci drawing, has been playing out pretty beautifully. So we've seen Bitcoin rally up to the premium zone, try get outside of that deviation zone, ended up failing, and that has led to a move back down to the mid-range now. And that mid-range is also the yearly open at 87.1K. So what price has done here is it's pushed up, it's set a trap. Everyone thought we're so back. It's on all of the theories around why Bitcoin needs to go to all-time high in January were out. And exactly then, you set the trap and you come back down to the mid-range. It's simply a range. You sell, you short near the premium zone, as close to the deviation zone as possible, because this is your extreme. And you buy or long as close to the discount zone as possible towards that deviation. So that's the way you play ranges. You don't diddle in the middle here, where we're currently at right now. So yearly open, we've retraced that 2026 opening rally finally. And now you've got your show of weakness here with that daily close on Sunday below that yearly open, which really suggests that Bitcoin is probably going to be eyeing up the liquidity from 80.6K to 84.4K. You've got a bunch of targets here, untapped lows, which I think we're going to head towards, because all else being equal, we've headed towards the range highs. That's failed. So you'd expect a move now to the range lows in this general discount area. That can be choppy. The path to get there is not going to be straightforward, but that's what we're going to dive into today. So going into the lower time frames on Bitcoin, let's have a look at what we're seeing. So this is our range. We're now at mid-range. We've lost that yearly open finally. We've had a show of weakness after a trap of the highs. So now we use that as context for the lower time frame. So if we now look at Bitcoin, if we get something like the bands on, so look at those 12 and 21 bands on the daily, they're now red. So you've successfully created a fake out here. You've created a trap where everyone gets bullish and you come back below to continue the recovery, continue to cause and effect the consolidation. As I said, Bitcoin was likely to either go sideways or break down. It wasn't likely to trend up back towards these higher levels. It's only been 60, maybe 70 days now of cause and effect, as I mentioned in that video I played for you guys. It's not consolidated long enough because the distribution before it was 111 days, as I showed you, or around that. Let's just take it from here to the breakdown, around that 116-day mark. You need to recover for at least the equivalent time, if not longer, to reaccumulate those positions, buy back all of that selling that occurred above 100 and actually turn it into demand. Because right now it's been supply. And that's why you see these moves. They come up to the highs, they get everyone bullish, but then that just generates exit liquidity again because we need to keep churning positions. We need to keep recovering. That's how markets bottoms. That's how markets reaccumulate. It's coins changing hands from those who want to sell. Those long-term holders of Bitcoin who we know have been selling, they switch hands to new holders. And that's how markets rise. That's how demand rises. And Bitcoin, we know, is a unique asset in which the supply is capped. We've never really seen an asset like it where it is so demand driven. And that is a double-edged sword. You see it be really volatile to the downside because of that, but also, as we know, to the upside, it goes up and to the right on a long enough time frame because it is a demand-driven asset. And that's really the only aspect moving price, since supply isn't as much of a factor and gets less relevant, of course, every 4 years with the halving. So we just need to find a place where we can recover. Right now we're range bound, as I showed you guys. Bands are now red on the daily, so analysis has been playing out that I mentioned to you guys. And on the 4 hour, what we're seeing is Bitcoin is retesting these bands and respecting them as resistance. So since we hit that inside week candle high, we grabbed all of that liquidity. We couldn't use it. We couldn't use that liquidity to propel us on higher, those short liquidations, stop losses. Instead, breakout buyers, they were used as liquidity for exits, for smart money to continue selling. And that's seen price action wise. You don't even need to know all of the context. All you need to see is price closed back below, confirming a fake out, and then price followed up with a market structure break. The low that led to the high got broken over here, as you can see. That then confirms that Bitcoin has a trend shift and is likely to continue breaking down. So all the signs were there that Bitcoin was moving into a downtrend on these lower time frames, and that's where the 4 hour bands then came into play. You're seeing them act as resistance, producing new lows. So let's see if that continues. We're now rising up into those bands early in the London session. Bulls, what they need to do is flip these bands bullish. They need to flip these bands green, and that can be the start of Bitcoin building something. But what's more likely is that this weakness is genuine weakness on Bitcoin, because we have come back to the yearly open, lost it, could barely produce a bounce when we first hit it. That was your first telltale sign, and now we're respecting those bands as resistance. All else being equal, should lead to continuation lower to some of those liquidity targets that I mentioned to you earlier on in this overall range over here. But it's not going to necessarily go there in a straight line, which is what's going to catch traders out. But as a trader, you're looking to use your systems. If you see the H4 bands being respected as resistance, and that's part of your system to look for sells, then that's what you do. You follow your systems because they are data backed. They take the bias out of it, the emotions out of it, and are based on real data, real probabilities, so that you know over time, if you keep following your system rules, you will make money. That's trading. That's why I teach inside the school. So expect these bands to act as resistance until they don't. And that should then lead to new lows as it did over here on Sunday. So Monday's range is currently forming. We're currently trying to recover this sell candle on Sunday, but price is already struggling here. So if we do start closing below that yearly open again, I think that would be the next confirmation that these H4 bands are likely to hold as resistance and actually lead to a move down. But Mondays can be choppy, so if you start closing above these bands, then there is a potential for Monday to set up that trap move before a Tuesday reversal, and you actually get something that takes out more stop losses over here. You get another fake out essentially just like this, where you then wait for the same principles. You just wait for your market structure break, as we had over here. Similar scenario, and then I'll be looking again for downtrend continuation on the lower time frames, because Bitcoin is in a real liquidity crisis. This is exactly what I've been talking about in all the recent videos. I hope you guys have all managed to catch up in the time I've been away. Made a bunch of videos about how Bitcoin's in a liquidity crisis, and they're all playing out now. Again, making daily videos is a real funny thing because you don't get to see how the videos from 8 days ago, 9 days ago, 10 days ago really play out. But you do now, since that was the last video I uploaded, and the liquidity crisis is as follows. It's because gold and silver, 40 trillion worth of market cap, are the trending assets, and they have been the trending assets. It's what I've been talking about for so long now. And as we can see, when gold goes on its breakouts and has momentum, that's when Bitcoin actually bleeds. That's when Bitcoin underperforms. It either stalls and goes sideways, or, as we see now, has a downtrend and actually has that bearish price action as gold goes up. And it's when gold consolidates, like over here, that Bitcoin's allowed to move up and move higher. Again, Bitcoin's biggest moves, they always occur when gold has been consolidating. So you had this period, gold tops out over here, goes sideways, and look at the same period. Bitcoin is breaking out and going to new all-time highs while gold makes lower highs and actually consolidates. They can't rise at the same time. There's just not enough liquidity in the markets. That's why you have this correlation pattern that I've been talking about for years now. This has been occurring for so long, where gold, when it breaks out on its momentum rallies, Bitcoin stalls and Bitcoin bleeds. Yes, both assets go up and to the right in the long term. If we zoom out, they both do indeed rise together. You can see Bitcoin here, and you can see gold now below. If you look at the long-term path, they're going up and to the right because they're a hedge against the monetary system, which we know is failing. But on the lower time frames, when gold consolidates, Bitcoin runs, and when gold breaks out and has momentum, Bitcoin stalls or actually bleeds bearishly. And that's because you've got $40 trillion worth of assets between gold and silver breaking out right now. Look at that. Talked about in all my videos how to watch for gold to retest these 10 and 20 EMA bands and that lead to new highs. You also had this 2025 high pivot that I mentioned. You wicked into the bands, respected the 2025 high, and that has led to a rally to new all-time highs. Played out absolutely beautifully. So now you just expect trend continuation, and on the lower time frames, you're really just watching 5K. 5K is going to be your psychological level when looking at gold on the 4 hour, on the 1 hour. You've got, of course, these 4 hour bands being respected right now. Since we're in a fast trend, we've got momentum right now. So look to see if that continues. Any dips into these bands are leading to new highs. And the bands are currently around 5K. So dips into those should, again, lead to new highs. And if you start closing below 5K, then that can potentially set up for a bit of a bigger cool down and something where we may need to actually then consolidate on the higher time frames and come back for another daily bands retest. So you lose 5K, then you probably go into a consolidation like this, and that can occur from either now or that can occur from much later on where the bands then catch up. But if we're going to continue the fast trend as we have been doing this morning, then you just simply watch these 10 and 20 bands on the H4 and expect dips to continue leading to new highs. That's very simple on gold. And while it has momentum, don't expect Bitcoin to be strong. There's not enough liquidity in the markets. And it's the same with silver. 12 hour was the time frame I told you to look for. 10 and 20 bands over here. Retested beautifully, not once, but twice. Led to new all-time highs. It's now above that $100 psychological level. And again, 40 trillion worth of assets uptrending right now. That's the market structure. That's what it's showing us. It's showing that metals are in favor and Bitcoin's just not in favor at the moment. And eventually that will rotate back into Bitcoin, as I always say, but you've got to be patient. And the charts, they tell the truth. You can't hope the charts or wish the charts to do something else. You play the charts what they are. And silver and metals, they're all trending up right now. Bitcoin is not. We need to at least see silver, gold, and the rest of the metals stop uptrending, which is going to take some time before we really see Bitcoin then kick into its best macro uptrending conditions again. But until then, silver, you're looking at something like these 4-hour bands. Potentially the 6-hour bands are actually more respected. So yeah, you see 6-hour bands, any dips should lead to new all-time highs if that fast trend's going to be respected. And you've got that $100 psychological level where if you start closing below that, then you go back to your 12-hour, back to your higher time frames. And that's then where you look for a bit of a higher time frame consolidation. And that can look like this, where you then eventually go higher after dipping into these H12 bands. So that's the market right now. You're in a liquidity crisis. You've got metals rallying, absolutely ripping, and that is leading to even stocks not being able to break out. If I pull up the ES, you can see this chart is actually pulling back into its 50-day EMA into that 2026 open again. So we've had that deeper dip on the stock market. So let's pull that up. Let's go like this. We've come into the 50-day EMA. Question is now, does that lead to new all-time highs, or are the rallies in metals just too much of a liquidity drain for this? And if so, if we lose that 2026 open, then on stocks, I'd actually be looking at the weekly time frame and looking at the 20 band over here to potentially provide support. And on deeper dips, which we haven't seen since the tariff crash, the 50 EMA on the weekly. But daily, still good. We are still bouncing off that 50-day EMA, so you just need to see this now produce a new high to show that it's being respected. And if you close below the 2026 open, that's probably going to set up for a deeper dip. And that's going to be catalyzed by these metals just really taking over and really taking all the liquidity from the market. So it's not just Bitcoin suffering. The entire market suffers. Very simple. Play the charts as they are. Once metals stop trending, they stop going on this high time frame rally, that's when we can see rotations to other assets. Until then, that's morning markets. Got a high time frame outlook coming later on to really deep dive into the macro, where we see Bitcoin going. So stay tuned for that this evening. GM.